Hey, welcome to Dow Stock Talk, where I talk about topics relating to investing and finance, but more specifically, the stock market. In this video, I'll be doing a stock analysis on Tesla and whether I think you should buy Tesla. And guys, let me know what you think about the new setup. We have Warren Buffett on the left side and Wolf on Wall Street on the right side. Old school versus new school. Let me know what you think about the canvas posters in the comments below.
But before we get started, make sure you smash the like button because it helps the YouTube algorithm. It helps YouTube quality content and help my videos reach a broader audience. Also, if you're interested in finance and investing t-shirts, make sure you check out my store, Wall Street Stock Apparel, where I make custom finance and investing t-shirts. Now, like I said, in this video, I'll be doing a stock analysis on Tesla, and I'll be telling whether I think Tesla is a particular buy. So I'll be going over the company overview, financials, news, anything that you may need to determine whether or not you think Tesla is a good buy. I'll be going over in this particular video. And I'll create timestamps so you can skip around to your likings. I'm pretty sure a lot of people already know what Tesla is. You can think of pretty much Tesla as probably the world's largest electric vehicles. They work with batteries as well, but primarily they're known for their electric vehicles. So I'm going to change it up a little bit, and I'm just going to look at the stock price right now just to get an idea, because sometimes I just kind of go straight into the business information. But right now, Tesla stock price is $278 a particular share. I do want to mention though, just recently they had a 3-to-1 stock split. So at the time before the split, Tesla was around $900. Now when they did the stock split, all it's doing is just issuing more shares. So when it was 3-to-1, so since the stock price was $900, they're issuing 3 times more shares. So you divide 900 divided by 3, and that's how you got the 300 a share. So they're think about it as like a pizza pie. The business, as far as like the fundamentals and stuff, is all the same. They just kind of slice it into a little bit more. But I just wanted to kind of give you that particular news. So if you've seen the price of Tesla change drastically, it was because of the stock split. Now, if we look at Tesla from the past 5 days, down 6%. If you look at the month, down 7%. 3 months, up 9%. Year to date, down 21%. And the 1-year return, if you base it off from April 30th, would have been up 13%. So I like to do a stock analysis on Tesla because it's a very popular stock and people always talking about it. But let's look at how Tesla makes its money. This is how Tesla makes the money. I'll do the breakdown. I picked this particular visual chart so you can kind of see how they make money. So it's 4 particular ways. So the automotive, which means like the selling the Tesla cars, consists of 84% of their revenue. So I always want to go over how they make money so you know what's really driving the business as far as profitability, and in this case it's automotive. And this is, by the way, this is from 2021. So they made $45 billion, and I'm pretty sure that's revenue. $45 billion for automotive. Leasing, $1.6 billion. That's kind of interesting. They actually have it where they can kind of create their own insurance that's in real time. Don't quite understand that, but that's interesting. The services, $3.8 billion, and then their next biggest one, energy generating and storage, which consists of about 5%, which is $2.8 billion. So in 2021 altogether, they generated $53 billion in revenue. So, and here's another breakdown. Automotives, 81%. Went over this again, but just so you can kind of visually see the numbers. As far as 2021, automotives 81%, automotive credits 2%, automotive leasing 3%, service and others 7%, energy generation and storage segment revenue 5%. Let's look at the business model in a particular nutshell. So there's 2 main components: Tesla manufacturer plant, which kind of make the vehicles, and Tesla Gigafactory, which makes the batteries. So that's kind of the 2 main driving factors, as we can kind of go up here which would be the 84%, and in this case it would be 5%. So those two are the main driving one, and then you can kind of combine that together where you have online Tesla shops, physical Teslas, and then it goes straight to the customer. So they cut out the particular middleman in this business model. And this is what I was talking about, the real-time insurance business model. It says a real-time insurance business model enables Tesla to build its own insurance arm by dynamically adjusting premiums based off of real-time driver behavior. So as far as the innovation in Tesla, we can see that it definitely have a lot of innovation, because this whole concept is completely new to me, but it's really important to understand the business, so you can, especially when you're talking about growth stocks, so you can really understand the big picture, the TAM, the total addressable market, and different factors. So whenever you're valuing a company, you definitely want to be able to understand the different parts of the business. Let's jump into their financials. Okay, so in 2008, they generated $21 billion in revenue, but they actually lost $976 million. 2019, $24 billion in revenue, they lost $862 million. But this is where it becomes interesting. This is where you have to, when you're looking at growth, you have to really see difference and how things can change drastically. In 2020, that's when the pandemic happened. $31 billion in revenue, but $721 million in as far as earnings. So right here, that's a big change. You go from not being profitable to 862 million to 2020 to actually making 721 million. That's really insignificant on the grand scheme of things. But when we see the growth rate, 2021 they had a monster year. So 2021, 53 billion in revenue, but check this out, in earnings, $5.52 billion. So when you look at the growth companies, that's what you kind of have to look at. Okay, they might not be making money now, but in the future, as far as growing earnings and realistic expectations based off of their resources, their facilities, the total addressable market, all of these things you kind of have to factor into. And that may be one of the biggest mistakes I made in my older video. I kind of focus a lot on the financials with Tesla and the debt and stuff like that. I really couldn't make an accurate assumption with the particular business, so I personally did not invest in Tesla simply because of financial reasons. Now if you look at the earnings for the past 4 quarters, they have been blowing earnings out the park. Now what I do want to go now is I want to look into a little bit more details as far as how they made money, like what was specifically their sales. So I'm going to look at the 10K. So if we can see, if I'm looking at the particular 10K right now, so and I'm just going to look at the change as far as, because we already went over how they make money, but as you can see from 2020 to 2021, a change of increase as far as down on 79%. Leasing 56%, energy generation and storage 40%. Now I do want to make it known that when you're talking about making $1 million versus $1 billion, that increase can be substantial. But once you start getting to the $1 billion, it's going to be much tougher to make huge jumps like that once the dollar amount gets higher and higher. This one from the Investor Relations, their latest PowerPoint on the Q2, as we can see, most of their sales comes from the Model 3, and that's the particular cheapest one that they particularly have. So as you can see, most of their sales rely on the Model 3, which is 2021 for Q2, 201,000, I guess we'll just call them 304 units. We'll just call them units. Well, that's total, I'm sorry. 199,409 delivered for Model 3, and the Model S, I think that's the most expensive one, $1,895. The reason why, and they have as far as the storage and stuff as well, the battery storage and stuff as well, but I'm kind of really going to focus on the vehicles, because that's right now where's the driving factor. For the Model S and X to sell a lot, I think it's really going to come down to the price point. The Tesla site, this is the Model 3. I did it roughly, so the Model 3, we can say roughly that's about I want to say 46,000, and the model, I believe the Model S is the most expensive one. That can run between 96,000 and 120, yeah, $127,000. So these cars are very expensive. So when you looking at as far as how many cars can they sell, you also have to remember how many people can afford it. So most people can't afford this Model S. But the Model 3, on the other hand, that we end up seeing, this one is probably a lot more realistic that people can afford. It's about, I believe it's about 46,000 is the Model 3. And then as far as potential, after savings and stuff like maybe tax credit or something like that, is 40,000. So you guys kind of really understand. In order for a lot of these cars to get sold, the average person have to be able to afford that. So these are things that you just want to keep in mind when you think about Tesla. So if they can get that price point down, that's going to be, it's probably going to have a direct correlation to how many cars that they're able to sell. Speaking about this, how many cars they're able to sell, since we know that that's their main driver, like how many cars they sell, let's look at how many cars they have delivered in the past and the future particular projection. So this is how many cars they particularly sold each particular year. You can see they came a long way. 2020, 2013, 22,000, 2014, 31,000. And these are numbers are these are just the actual numbers. 50,000, 75,000, 103,000, 245,000, 367 thousand for 2009 and 2020. That's a 500,000. And I believe 2021, I think they're definitely going, I think for 2021 they definitely broke 1,000,000 or pretty close. All right, now I like how they actually did this one. They actually came out with two different scenarios based off of some information or whatever. If they said Tesla grew 36% based off of their car sales, this is how it would particularly look like. So for 2021, 678,000, 2022, 922,000, 2023, 1.2 million, 2024, 1.7 million, and 2025, 2.3 million. That's if Tesla car sales grow 36% per year up until 2025. Actually, I think these projections are very realistic. I think this is very realistic as far as Tesla delivery based off of what I know so far. Now, another way you can actually look at it, if we calculate the average growth value over the 7 years, which is 59%. I don't think this one is going to be that accurate, but it's also good to see so that you can see different scenarios. So if it grew 59% based off of the 7-year average, we're looking at for 2023 2 million, for 2024 3 million, and for 2025 5 million. Now, like I said, for me, it's not the production that's a bit mega concern, but it's the price. So you have to remember, a lot more people have to be able to afford it. So they're either gonna have to get the Model 3s down to, see a lot more cars on there, or people gonna have to be making a lot more money. I just like to cover this stuff because these are like key components as far as to see Tesla's true potential as far as profitability. Now let's look at simply Wall Street to see a little bit more about the financial side and things like that. Now, as far as the Tesla competitors, they have General Motors, Toyota, Ford, and the reason why I particularly don't think this is a fair comparison is because when we went to the what makes up Tesla business model, if you neglect, just looked at them as a car company, you're neglecting the energy generation, storage services, leasing. So you're neglecting all of those, and a lot of future growth can come there. So for me, I like to think of Tesla more as a electric and maybe energy company altogether. So these comparisons may not be fair, and when you see the numbers, you'll see why I'm particularly saying that. Now let's look at the evaluation. So one of the key metrics that they particularly have is the PE ratio. So it's kind of giving you a valuation based off of the earnings. Pretty much selling for 93 times earnings. So the stock price is selling for 93 times the earnings, which would 93 times earnings based off of the current stock price. Price to sales 13.3, That's a lot of these numbers is on the higher side, but you gotta remember this is a growth company. I kind of left this one particular out, but it's also good to look at the gross profit margin. The gross profit margin, according to this, is 27% net profit. That means out of everything, once you do research, development, or experience, all the other expenses is 14%. So you can see that net profit margin is pretty thin. I think the automotive industries are pretty thin as well. So you also want to keep that in mind as far as the amount of cars they sell and the price points like that. That's kind of key information that you want to know, that the net profit margin is much smaller. Gross profit's 27%. You would like to see, this is a car company, but you would like to see the net profit margin in like a rule of thumb of like 30%. Now, this one is based off of their price to earnings, based off of their ratios and competitors. As you can see, this is exactly why I don't like comparing it, simply because if you look at the forecast annual earnings growth, the Tesla growth potential compared to the other ones is much higher. And as we can see, as far as Ford has, it seems like Ford has a good amount, and this one as well. But as far as the type of company, I think Tesla different than the other ones, where I don't think this is a fair comparison from that. So if comparing all these together, yeah, but it's just kind of, Tesla's just not close enough for me to make a fair comparison. If we go look at the forward PE, Tesla's would be a 66, Ford would be a 12. But like I said, just comparing it to cars, I don't think that's a good comparison. But it's always good to particularly see. If we look at the price to sales, now this does show you information as far as the automotive industries, as you're just looking at it from based off of cars. It would indicate that Tesla is very expensive if you're just looking at it compared to regular automotive companies. That's a key thing. So on the bearish side, they're looking at this and saying, well, compared to all the other car companies, Tesla is extremely overvalued. So they could kind of have a point there. Down to a little bit more as far as what they think a fair PE for Tesla would be. PE of would be 26 for Tesla. I actually think that would be a fair price, but right now currently is 93. So this will also suggest that from a value perspective that Tesla is kind of overvalued based off of the current price. Now let's look at based off of the discounted cash flow, which is pretty much you project cash flows and you discount it back based off of how much growth you can expect from the company, or how much cash you expect them to increase, and then based off of that future growth rates and your projection, come out with a today's value. So right now it's about 284, and they're saying the fair value is about 173.33. Now, again, with a grain of salt, I think that 173, it may be a fair price for Tesla per se, the 173, but I do agree with them as far as Tesla being overvalued. I did say Tesla was overvalued, a while ago too, and the stock price went up drastically too. But I'm just kind of basing it off of the information that I've kind of known so particularly far. As far as the stock price, I just kind of look at this. This is a new feature that they particularly had, which is kind of like an overall consensus of analysts where they think that the price would actually go. The forecast in 12 months, they expecting the stock price to only be up 6% from the year to date. This is based off of analysts. So agreement low. Analyst agrees range is spread more than 15% from the average. So there's a disagreement as far as the price of what analysts kind of think, but forecasting projections and stuff like this you can just take with a grain of salt. But just so people can kind of have an idea, I just kind of go over for video purposes. Now let's look at the future growth of the company. Remember, their discounted cash flow is based off of these forecast projections. So let's look at this. For 2022, they're saying $53 billion. Their earnings is $5 billion. For 2023, they're saying they think they're going to, for 2022, so for 2022, their earnings, they expect to be 5.5 billion. For 2023, notice on here that they're expecting the revenue to be 85 and the earnings to be 12 billion. I don't know. To me, that may seem a little bit optimistic about that. So given that, and we look at 2024, they're saying billion in earnings and 118 billion in revenue. I actually think those, I'm not like a professional or anything like that, but based off of what I've seen, I think those numbers may be a little high, and that would could affect the discounted cash flow. So if I think the earnings will be lower, that means I think the fair value of this particular that fair value, I think it should be a little bit less than that, honestly. But I was wrong about Tesla before, and I can be wrong again. Analysts future growth, they're saying Tesla, as far as their earnings, can grow. They're expecting to grow in the next, I think these are based off I think 1 to 3 years, 24% as far as forecast annual earnings growth. I actually agree with that. Actually, the forecast annual revenue growth 20%. So anytime like they, as far as growth, you would definitely want to see double digits, 20% or more each year for a growth particular stock. And I think these are two are fair assessment based off of what I know so far. I mentioned that the industry earnings and revenue as far as future growth is supposed to be higher than Tesla's company. I thought that was kind of very interesting. Now, as far as financial health, Tesla is in great financial standings. Their assets cover the short-term and long-term liability, and as you can see earlier on in my earlier videos, I was very concerned about their debt, but it looks like their debt is no longer a problem. As you can see, they have as little as $3 billion in debt, and as far as cash, they has $18 billion in cash. So as far as the financial standing, as far as Tesla, everything is good to go. Management team is pretty good, but let's also, as we can see, there's been a lot of inside selling from a long-term investor. I don't pay too much attention to this, but if you had a shorter position in Tesla, that is also good to mention. As we can see, industry, now this is interesting. Institutions own 46%, but the general public also own 36%, and insiders own 16%. So as we can see, this one is kind of like both general public and institutions can really end up moving this particular stock price. Also, as far as a particular concern that you notice that Tesla has been diluting their shares. That means they're issuing more particular shares, which makes you own less of the company. Want to see company diluting shares, and we've seen Tesla have been doing that. So that's definitely not necessarily a good thing. Personally, whether I think Tesla is a buy, to me, I think the stock is just too expensive for me right now, based off of what I kind of know and the information that I showed you guys. Now, if Tesla goes down to about $200 or their fundamentals get much better, I might end up reassessing it. But as far, I'll probably, if Tesla goes down to, so as far as, you know, Tesla stock price, to me, I do agree that it's overvalued based off of the numbers that I particularly seen so far. If it gets below the $200 mark, I'll reassess it. Or if we see a lot of higher growth or higher conviction as far as what they'll be able to deliver, I'll also reconsider.
But that concludes Dow Stock Talk. Let me know in the comments below, what do you think about Tesla stock and the company. If you haven't already, make sure you hit the like button. If you're new, make sure you subscribe to my channel.